on a standard 30-year mortgage for $400,000 at 7% interest. You will pay the bank over $558,000 in interest alone. The first 10 years of your payments build almost no actual ownership. You are renting your home from the bank at a premium. This is by design. This is a financial architecture known as the Equity Mirage. It is the engineered gap between perceived ownership and mathematical reality. It is designed to make you feel wealthy while you are servicing debt. The system ensures the lender holds the real equity for as long as possible. It is a structural feature of modern consumer finance. Over $12 trillion in residential mortgage debt exists in the U.S. today. Another $1.6 trillion is held in auto loans. The modern 30-year mortgage was standardized by the Federal Housing Administration in 1948. This single policy created a multi-generational system, a system of turning citizens into reliable, long-term revenue streams for lenders. This was not an accident. It was a strategy. We will now decode the mechanism. The first layer is mortgage amortization. Your monthly payment seems constant. The allocation of that payment is not. On that $400,000 loan, your first payment is roughly $2,661. Of that amount, approximately $2,333 is pure interest. Only $328 reduces your principal balance. The bank takes its profit first for years. This is a subtrap called the interest front load. The second layer is asset depreciation. This is most visible with auto loans. A new car loses about 20% of its value in the first year. Your loan balance decreases much more slowly. For the first 2 to 4 years, you owe more than the asset is worth. This is called being underwater. You have a liability that requires insurance, fuel, and maintenance. It is not an asset. It is a weighted chain. This subtrap is known as the depreciation gap. Now consider the compounding effect over 20 years. On the same mortgage, you will have made 240 payments. Your total cash outlay will be $638,688. Of that, nearly $439,000 was interest. You still owe the bank almost $200,000. You have paid for the house 1.5 times over and still do not own it. That interest, invested at a conservative 7% return, would be worth over $1.2 million. That is the true cost of the Equity Mirage. The system was never designed to build your equity quickly. It was designed to absorb industrial capacity after World War II. Mass consumer credit was the new engine of economic activity. The objective was not citizen wealth. The objective was stable, predictable cash flow for financial institutions. This flow comes directly from your future labor. Capital Dispatch reconstructed this analysis from public financial records, economic research, and documented market data. You are not just a homeowner, you are collateral. This is the accelerated deleveraging protocol. It is a mechanical escape, not a mindset. Step 1 is to systematically break the amortization schedule. Making one extra principal payment per year is the minimum effective dose. On our example loan, this single action removes 7 years from the term. It saves over $120,000 in interest payments. Do not refinance. That just resets the clock on the interest front load. Attack the principal balance directly. This is non-negotiable. Step 2 is to build a dedicated debt servicing lever. This is an income stream created for a single purpose. That purpose is to eliminate principal on your largest, longest-term debt. Every dollar from this stream buys back your future freedom. $500 extra per month toward principal on that loan saves $207,000. It clears the debt 11 years sooner. Leverage is a tool to dismantle the cage. Step 3 is asset conversion. The moment your largest debt is cleared, your cash flow is liberated. The thousands of dollars you paid to the bank each month are now yours. This surplus must be converted into income-producing assets immediately. Every dollar not deployed is being eroded by inflation. The system that charged you interest can now be used to pay you interest. You stop servicing the machine and start owning a piece of it. Debt is a rental agreement for your future income. Ownership is when your assets pay for your present. Most people spend their lives paying rent on a life they believe they own. Capital Dispatch. Now you know the math.